Guys, welcome to another video of me where I explain how I actually had some trade in this market. So here today I would just want to explain how I was able to catch a very nice move, ratio 1 to 3 on USD CAD. So and this channel is going to be strictly on the same thing, because I understand that bombarding people with different knowledge when it comes to Forex it's confusing. So I'm not going to teach much. I'm not going to teach anything different in this channel. So all I will be teaching is one pattern, one thing, so that you will see how consistent it is. It's not that maybe it's 100%, but if you have the trader's mindset, which understand that trading is all about probability, it's not about whether you are right or you are wrong, then you find this interesting. So this is USD CAD. So when I checked this pair, I was saying that okay, this pair has been trending. So this is 1 hour time frame. I actually use daily and 1 hour, but since daily has confirmed to me that it's also bullish, so I have no reason to, at least if you look at it systematically, daily has been creating sort of higher lows, so it has been pushing up. So I just need to go to 1 hour and see what 1 hour is currently doing. So I look back and I see that 1 hour has been consistently bullish, bearish, temporary bearish. Then from here now, you can see that this market has been bullish. So when I check this, all I do is to look for a current structure, and as I said, my structure is just one approach. There's no complication here. So let me explain that again. Current structure, this is what I want to see. I want to see a situation whereby market is pushing high, coming back to take my probably a liquidity taken out. So once I see something like this, all I want is to wait for the market to come to the extreme order block, then I'm going to buy. So this is where I'm waiting for the market to come, this level. Nothing. Once I can confirm my break of structure here, all I look for is to look for my liquidity, whether big or small, which is this. Then I'll look for my extreme order block, then I place my trade. Nothing else, no reservation, no thinking. I'm not using lower time frame confirmation. Lower time frame confirmation has nothing to do with your analysis than to give you extra confirmation if you are kind of uncertain, and to increase your risk to reward. But since I'm not looking for 1 to 20, 1 to 10, all I want is 1 to 3. So I don't need extra lower confirm. For me, psychologically, it's distracts me. It makes me, it's not helping me psychologically. So because the concept is, when all your setup line up and market get to your entry point, and you are still now looking for another confirmation before you enter the trade, then I feel is kind of distracting for me. So because I don't want to be thinking when market get all my confidence comes together, I just want to place the trade and allow the market to do the rest. So that's why I choose not to be using lower time frame confirmation. I check all these things in 1 hour, and boom, I enter the trade. Know that there's no perfect setup. So it will go south sometimes, it will play out, and so that's how it is. But if you have the trader's mindset, which is probability, and this probability of a thing is not all about single trade. So when we are talking about probability, it's not about you want to enter the trade and you think maybe it's going to win or it's going to lose. No, that's not the probability they are talking about. Probability is what's the probability that if you take this setup 10 times, at least you're gonna win 3 times? If you win 3 times, that will give you about 1 to 3, that will give you about 9%. And if you remove your 7%, it means that bad as bad, you are still gonna come out profitable plus 2%. So it's all about how accurate it is. Sometimes it give you 50-50. If it gives you 50-50, it means you are up 10%. If it give you 40, it means you are still profitable. So the worst you can get with this HARA. So when you think in that probability in the series of trade, you think from the angle of I want to take 10 trade with this same setup, I want to win. So let's say what I'm going to win. If you win like 3, maybe you have the rest lose, maybe break even. No way is still going to be profitable. So those are the little things that you have to be aware of when it comes to what are they calling it, when it comes to probability. So in this scenario now, so when I established the direction of the market, I was like, okay, what are we seeing? Let me look at the current trend of this market. So from here, look at it. From this situation now, market has been bullish. Market has been bullish up to this level. So why? Because this is the low that the market created last after taking out inducement. We had a small pullback here after taking out this liquidity. Market took out this liquidity and did what? And give a direction. So I just want to map it a little bit so that you see how I analyze it and where I was coming from. So look at it. We have a break of structure here. So because market is trending or is going in one direction, doesn't mean there will be no pullback and there will be no change of character or sort. Market can be bullish and at the same time give you change of character. There is no big deal there. It's normal. But the point is, does that change of character, is it in the direction of the overall trend? So because you are using 1 hour time frame, if market in daily time frame or 4 hour or bigger time frame is bullish, note that at some point pullback in those bigger time frame can give you change of character in 1 hour. So in this scenario, since I understand that, I know that this market has been trending, then this is a massive pullback. Actually give me change of character here, which I said is okay. You actually gave me change of character here, and I said okay. I was looking at it thinking, okay, if this market wants to go down, then you have to come and mitigate something here, this other block, then drop. And as you can see, it actually did that. It mitigated here and reacted. But because the overall trend is bullish, that change of character, that sell pressure is kind of temporary. So, and what happened? Market came back here and do what? And gave us another change of character to the direction of the higher time frame. So I was not placing any trade in this situation because when all this thing was happening, I was not paying attention to this pair. So when I saw this, I said, okay, we had a change of character here. If I had probably take a sell here, I would have been in probably maybe few profits. I don't know how much. Maybe I can get my 1 to 3 whose stop loss here. So I'll still have my 1 to 3. But this is not the trade I'm trying to explain. Look at it. Market has been bullish, changed to bearish suddenly, then reacted and changed to bullish again. So now we had a change of character here. It means our bias now is bullish. So after we have a change of character, what are we looking out for? We look for a kind of liquidity that the market created. Liquidity is not necessarily going to be many candles or does this. It's just an inducement. So this is my little inducement which I was able to identify, and I said, okay, what is going to happen here? I was not still in this trade because I wasn't paying attention, and market mitigate this other block. This is not actually my setup, because if I'm to take this trade, I will wait for extreme order block somewhere here. No, this is extreme order block for market to come and mitigate. So, but this is not my setup, so I'm not actually interested. So, but looking at this situation, you can see that what market did was create another structure at the top here. So it means that this is another break of structure here. Look at it. This is another break of structure. Why is this another break of structure? Because before the market break this structure, it actually took out liquidity, which is inducement. So it means that we are ranging from here to this place until market created another structure again. So this is our low. So, and as you can see, market creating another structure is the process whereby markets break a level and come back to come and take a kind of inducement or the previous level it created, then close above. Look at this. After this, market creates pullback, creates another, break this level, create pullback, continue, break this level, create pullback, break this level, create pullback. For all these are not structures. This is just a movement in the market, but it's not a structure. Until, let's say, this market now, this last pullback that the market created, market now came back, take it out, then close above here. Then it means that we had a structure here. So this place can now be our break of structure. This place can now be probably our break of structure. So, but all I see when I was looking at it is, where is our last low? This is our last low. What is happening here is just a movement, not a structure. And what I trade is structure. So it means that all this movement is just a movement to the up, and we represent them as part of liquidity. So what I use as an inducement is the last pullback that the market did. So if you look at it, look at this move. After market break this structure, this is it. Market was doing very small pullback here. Market was doing this and a push up. All these are not pullback because it's inside this movement. So look at it. Where is the last pullback? This is the last pullback that the market created. So immediately I saw this, I liked this level as my inducement, and I said, okay, since I identify my inducement, where is my last low? Because that last low that the market created is where I want to take my order from. So look at it, and I came to this level, then mark my order block and set my limit order. I actually place a trade here. So put my stop loss here and look for what? Look for 1 to 3. So this is my 1 to 3. So, and I forget, and as you can see what the market did. This took some time, but because this the way I trade, it doesn't really bother me. So whenever the market passed close above this level, then we have another structure, which is break of structure. So this is kind of simple. Look at it. All this now is all about having the mental capacity and understanding how this actually works. If you don't, then trust me, your psychology will have been in shambles by now. Because look at it, when the market mitigates my order block, market gives me this direction and came back almost at my SL. Sure, you understand? In fact, my SL was a little bit close like this, not this much. I think I put it almost below here. So look at it, market gives this direction. Maybe he has given me, because on my 50k account I'm actually risking 1%, maybe he has given me about $200 here plus, and market came back almost at maybe minus $450 or 400 and something. And look at it, market went back again, gave me the same profit, came back, took me almost at maybe 400 and minus 480. But because I understand this stuff, that no matter what is going to happen, if this market wants to continue going up, this level must be protected. So that's where I put my stop loss, and I know that this level is not going to be violated. So no matter what this market, so this is what mess up with people's psychology, because now you wake up, you see yourself in profit, you come back again, you see yourself in massive drawdown, you see again, you see you are happy, so this will give you a kind of emotional imbalance. So that's where you have to understand the psychology behind this game. And what will give you this psychology maturity is knowing exactly what you are doing in the market, knowing how the market behaves. So if you can understand all these things, you will see that this is not just going to get to you. Because to me, I was just doing some other thing and I was looking at this thing, because I know that worst to worst is I will lose 1% of this account, which is fine. But if this plays out, I'm getting 3%. So it's going to be a good deal for me. And look at it, market range throughout yesterday until yesterday evening around 10-11, I think. Look at it, around 20, that's about 9-10. So when I woke up in the midnight, I saw that boom, I'm already at take profit. So this is exactly how I view the market. And as I said, let me draw out this chart for you from where we had change of character. So this is the structure now. This is when we have first structure. Look at it. Market creates small inducement, because I was able to understand that market has taken out liquidity, and do what? Market push up like this. But on its way pushing up, I don't want this thing to cut. Okay. So look at this, small inducement, then market push up, start pushing up, then created another inducement here, then push up. Then this is the low, and market came back there, and boom, look at it. Is it not exactly what I was explaining to you? This is exactly what I was explaining to you. This is the last low that the market created, and market came back there, and boom, create another structure. So it's very simple. All you need to know is how this actually works. This is just a movement, not a structure. Some people will be like, break of structure. No, until the last pullback created by the market was taken out or is taken out, then the move continues. That's when you can say, okay, you have a structure. This is the low of the structure, and probably whenever the market gets to will be the high. So let's say the market gets to this level and start coming back, then it means that you, in this leg, you look for inducement, maybe somewhere here, maybe you have an inducement somewhere here. Then all you need to do is to just wait for that market to come back to this low and continue your movement. That's very simple. So this is how the market structure works, and this is the trade I was able to catch, and it went out well for me. So this is it, guys. If you have any question, you can just drop it in the comment section. I'll keep you guys updated. Then probably next video will be on this same setup that doesn't work, and you will see that I have this same approach. Those are when the approach fails. But because I know that I have an edge, I have a kind of edge that when I do this thing 10 times, I'm winning not less than 4-5 times. Then all I need to do is to keep repeating the same thing, keep approaching the market the same way. So it's not that maybe I'm posting the win, there's also some loss which I will review them in my next video. I will post them. So what I just want you guys to say about it is the exact way I approach the win trade is the exact way I approach the losing trade. So that it won't be like this is all my, no, nothing is almighty in trading, but because I understand the probability aspect of the game, so it doesn't bother me even if I lose. If I place 3 trade and maybe 2 is a loss, that's 2%. But if 1 win, that's 3%. So I'm still up 1%. So those are the way we think, and that's how it's expected for a trader to think in the market, so that one loss is not going to get to you, because you know that even if you have 1, 2, 3 loss, you just need 1 win to cover up. So once you understand that concept, then you won't care what the market is doing, even if you enter the trade and it's going at a stop loss and so on. So that's it, guys, for today. In the next video, I'll keep you guys posted and review my lost trade. Thank you, guys. Bye.